Today we are going to discuss about the new fund offer. So new fund offer is nothing but whenever a new mutual fund wants the subscriber to subscribe its shares or subscribe its units, it goes into the primary market and issues offer document and invites the potential investors to invest in it. It explains all the investment related risk, it obtains fund objective, its its asset allocation pattern, its working mechanism, everything is explained, and it invites the potential investors to invest in it. So a new fund offer is similar to new fund offer is similar to IPO. The process is almost similar. The as in case of IPO, the whenever the new company or an existing company wants capital, it goes into the primary market and issues IPO and and invites the public to subscribe its shares, and through from it may whatever it's maybe it may the reason it may be modernization it may be modernization, or it may be expansion for existing company, or in case of new company it wants money for its business purposes. So it goes in the primary market and issues IPO. So in a case of NPO is similar to that. NPO is also going into the primary market and asking the investors to subscribe in it. So it in NFO is just nothing but in simple terms it gives an investors an alternative investment avenue to park their temporary surplus funds. So so NFO is issued whenever the new mutual fund is launched. So NFO through NFO it asks the public to give the fund manager or the mutual fund asset management company money to purchase various securities. Um, so whenever a new mutual fund is launched, it is known as NFO. So as I mentioned, an NFO is similar to IPO. So IPO is, and as I have also already mentioned, IPO is issued by a listed company which is listed in either in NSE or BSE. It wants the money, it goes into the primary market and issues IPO. So after whenever the IPO is closed, so as we know, the IPO remains open for a very limited period of time. So whenever after the IPO is over, so the fund is available in the secondary market for subscription. So after the IPO is closed, the now the shares or the stock will not be traded again in the primary market. Now the stock of the particular company which has issued IPO will be available in the secondary market. So secondary, whosoever wants to purchase the stock of the particular company will have to purchase it through secondary market. So uh, so as I on previously also repeatedly mentioning it, the NFO is launched like IPO only. So similar to issuance of IPO. So after similarly, when an IPO is NFO is over, so NFO is also remains open for a very limited period of time, and it is when it is over, then the unit holders or the investors can purchase the units at the present at the NFO. That means the shares, the units can be subscribed at a particular net asset value. The whatever will be the at that particular date, whatever the per unit value of the units at that price, the investors, investors who intends to buy can purchase it, and those investors who intends to sell can sell it at a particular per unit value. So in IPO we are when you're purchasing an IPO, we're investing in a stock or share of a particular company. But in NFO, when you're subscribing NFO, we are not investing in the securities or the stock of a particular company, but in a range of securities. So it may be various types of security, it may be debt, it may be equity, and a portfolio of securities. So portfolio means a group of securities we are investing in, even we are subscribing in NFO. It may be in the asset allocation pattern, may be assets, debts, bonds, then index, it may be gold, it may be real estate. So when we are subscribing or investing in NFO, we are investing in a range of securities. So it gives generally in NFO it diversifies the risk, but in IPO the risk is very high because we are investing in a particular company only. So in IPO there is no question of professional management. So in IPO, when we're investing or subscribing the share of a particular company, we don't get the advantage of the professional management. We do not take the we cannot take or we cannot benefit out of the expert management opinion. But in case of NFO, the investment is done by professional experts on behalf of the investors. So it is helpful for the retail investors who do not have much knowledge of the investment in capital market. So it is helpful for them who are investing in new fund offer, because they can benefit out of the professional management expertise. So whenever a mutual fund comes up with NFO, it has to be approved by the board of trustees. So we know that trustee, there is a trustee who looks after the interest of the unit holders. So whenever the asset management company wants to come up with an NFO, it must take the approval of the board of trustees, as well as it must take the approval of the SEBI, which is the watchdog of capital market. So then only it can so then only an asset management company can launch a new scheme under the name of the mutual fund trust. So there is a no fixed time for launching of NFO. It may come up at any time. There is a no. It may come. There is no fixed time that when it will come. It may come up at any month, any time, it may come at the beginning of the quarter or the end of the year. So it may come up at any time. So there is no any hard and fast rule that it must come in the particular season or particular month only. So so NFO is nothing but an invitation. The So throughout the year, many mutual fund issues many NFOs. So NFO is nothing but an invitation to the public, the potential investors, to park their temporary funds by subscribing to the units. So the different intermediaries which are present in the channel of distribution, like agents or distributors, they hold they organize orientation, or they make the potential customers aware of the benefits of investing in the particular NFO. They just give a they just brief the investors regarding the benefits of investing in that particular NFO, and they attract them towards investing that parking they attract the investors in parking the temporary funds, temporary surplus funds. um, so the NF in if you are investing in NFO, it does not we cannot pay directly in cash. We have to either give the check or demand draft, or if the investors are aware of the modern banking facilities like net banking, they can pay the money through net banking as well. So as we know that in the most of the mutual funds invest in capital market, they deal with the securities in the securities of capital market. So we cannot say that it is completely risk free. Some amount of risk or some amount of risk is always associated with it. It is not completely risk free. So it is the duty of the every investor to go through the offer document carefully, because offer document, which is a comprehensive and in-depth document, has which gives a detail regarding what is the objective of the fund. The objective of the fund may be to give a regular income, or it may be the objective of the fund to give a regular and a steady income, capital appreciation. Then then it may some funds may be willing to give a tax exemption, or give prompt liquidity. So depending on that, or give them growth. So depending on the investment objective, the funds so the investor must go through what is the objective of the fund. So and secondly, it has to go through the what are the combination, what are the portfolio composition. So which assets it is going to invest, and it has to go through the structure. So briefly go to the structure, and how it will be operated, and what is the expected return from it, and what is the return expected from it. Must go through it. go through it. So which will the offer document will make him aware of all this. So it is the investor must carefully go through it. So thank you. So with this I come to an end of this session. So thank you very much. So keep watching my channel and subscribe, and if you like this video, please hit the like button. Thank you very much.